welcome to this session. It is said that the early bird catches the worm. I'm very excited to have you here in the middle of your morning commute and everything that you have to put aside to devote this 1 hour to create and learn something that will help you leverage your time and your resources so that together we can then create a world where we are financially independent and financially savvy. So without further ado, I would want to get right on into the session. Okay. I want to start with a recap of our session last week, which really talked about savings, expenses, and budgeting. Want to bring a few insights because, you know, like I said, everything that we're doing here builds onto the whole financial journey. So just a recap as we wait for people. Really, the key insights were, it's not how much one earns, but how much we spend that matters. How do we do that? We need to identify and optimize our key expenses. Remember, we talked about the big 3 expenses in everyone's budget: transport, housing, food. How we deal with those big 3 will go a long way to give us some breathing space, especially in this very hard economy. We talked about the illusion of time, the thinking that most of us have and say, no, those things, I'll think about them in retirement. But remember, the retirement that you want 20 years from now, 30 years from now, you have to start working on it today. It won't just show up. So we talked about how we can leverage the different times that we're in. If you're 20, if you're 30, if you're 40, if you're 50, there are different ways we can leverage that time and start afresh and start. The important thing is to start, because when you start and you're consistent, everything will compound. We also talked about defining our savings roadmap. What does that savings journey look like? Why do we save? Do you want to save for short term, medium term, or long term? What are the different options? We talked about time management versus life management, and also the cost of lifetime events, because we know that even when we try so hard to budget and plan, life happens. COVID happened, no one had budgeted for it. I'm sure when you're doing your, for the bank, when you're doing your analysis, budgets for 2020, no one had put in that factor of, you know, if the world stops, what happens? And just like that happened, things happen in our lives that we actually have no control over. So when they happen, how ready are we to weather the storm? Okay, so with that, I would like to also note where we are in our journey. We said we have 4 sessions. Today we'll be looking at diversifying income streams and leveraging our cash flows. Okay, and I remember one of the sessions when we're doing our objectives for this program, one of us said that they want to find out how to make money from their very small resource envelope. Yes, resources are always finite, yet we have big needs. We have infinite needs. Everyone is dreaming on our pocket. We have so many dreams, but you know, how do we make sure that we live our financial dreams? And ladies and gentlemen, today I want to talk about the 2 levers for us to actually leverage income and invest more so that our money starts to work for us. There are 2 levers. One is really debt management. How we manage debt into our lives is very key for us to be able to have excess capital, excess resources that we can invest as we're on our full-time job. There are also ways we can diversify our streams of income. What passions do we have? Okay, so once we understand how to play with those 2 levers, it's like a seesaw. Once we understand how to increase our earning potential, once we understand how to have proper debt management structures in our lives, then we're on the route, we're on the way to leveraging cash flows. Your small salary will no longer be small, but you would have diversified your sources of income. And obviously, we now need to factor in the economy. We're not working in a bubble. Everything we do, there's something that governs all the income that we get, the businesses we run, employment. so it's important to have all that into perspective, such that even when we diversify, we're able to know what does this mean when it comes to the economy that we're in. So hopefully we'll be able to cover all that today. Okay, so conquering debt is the one thing that I want to start with, because debt can come between you and leveraging your cash flows. We all know as bankers, this is your turf. These are things you do every day, even without breathing, because of your training. We know when people come to you to ask for a loan, we know the things that you take them through. So now let's mirror those things to ourselves and say, can I pass this due diligence test if I wanted to, go to a friend, go to a bank, to get a facility? How am I doing with my facility? Because it reflects a lot on our ability to leverage cash flows and make money work for us. The question that we should be asking ourselves today is, how bankable are we? Okay, how bankable are we? And this is an individual question. Oops. Sorry. This is an individual question. How bankable are you? Food for thought. What's your integrity story? We know that bankers, people come to us as bankers because of integrity. They know they can trust us with their money stories, with their businesses, and that we can help them go further afield because of the financing that we advance. How about us as individuals? What's our story? What would people say about you if you're not in the room? Investors bet on individuals, ladies and gentlemen, not on ideas. If you have a brilliant idea but you're a crook, no one will want to invest in you. Or you will not get the right investment, because those two go hand in hand. There's always, what's the right investment for where I am and for what I want to do? If you get into the wrong investment, you obviously come down. Someone will come after your empire, your business, or someone will come after your life because you've gotten into the wrong investment. So what due diligence do you do even before you get into these arrangements? Why are you getting that facility? Is it going to help you generate revenue? I want to give a real life example. When I read a lot, so I was reading a book on Jeff Bezos, and he said when he started Amazon, he was working for a very good investment firm, Wall Street, if you may call it, and everything was looking good. But then when he was looking at the data, he saw that there's a lot of traffic on e-commerce. And he thought to himself, what can I do in this sector? Yes, I'm here holding people's money and making sure that it works for them, but surely there must be an opportunity somewhere there. He talked to his boss, and his boss tried to say, no. Those are things for people who don't have jobs. You should be here focused on your job and leave those for those who are not employed. He went and spoke to his parents. And and now he had some money, he had some savings, but they were not enough. He spoke to his parents, who didn't understand the A to Z, but they understood Jeff Bezos. And they said, you know what? We don't know what you're talking about, but we know what you're capable of. So they advanced him $100,000. And remember how the economies work. They didn't give him money to waste, but they said, we're investing in you $100,000. And to date, they have 6% of Amazon. You can tell how wealthy they are. But they took the first bet on the person, even before the idea became something worthwhile. So are you bankable, ladies and gentlemen? That is the question. How do you become bankable? How do you become investable? We know that as bankers, we look at the 5 C's: the character of the person, the capacity to pay, the capital, collateral, and various economic conditions. Understanding these and applying them to our lives will actually help us go a long way to understand our DNA, whether we are bankable. So I want us to debunk some myths and speak out some truths, and also talk about some pitfalls that we may fall into as we go through our lives and try to build a financially sustainable lifestyle. The times when we are asked to be loan guarantors, do we understand what that means? We need to know that once we are guaranteeing a loan, we're also putting our life on the line in terms of our credit profile on the line. So who are you? Someone who, your friend can, become your loan guarantor? Ask yourself that question. Digital footprint. Right now, anyone you want to deal with will go online and see what they say about you. So what's your footprint? What's your digital story? Those things can come between you and accessing credit, or being able to, leverage cash flows, use other people's money to grow. Tax, are you a tax defaulter? How clean is your TIN number? We know we're in the advent where we're getting access to quick loans from telecom service providers. Yes, no one asks you for long forms, your mother's name, your father's name, but remember the digital footprint that you're creating. Are you a defaulter of those quick loans? Are you a defaulter of the buy now, pay later products? Like, in the solar sector where we have people who are getting products on hire purchase and they pay over time. Are you a defaulter? How about your social networks? Your corner shop at home? Are you on a blacklist? We know people who, get small amounts of money, but after some time, they cannot even answer phone calls. They want to pass the other way. What is your investment profile? Are you investable? Gambling. Trust is an economic good right now. If it's low, it costs everybody, indirectly and directly. And you may say that, we're far away from these things. No one knows about my tax situation. But ladies and gentlemen, we now have tools. We're in the era where we can leverage big data to know about someone in a flash. No need for LC letters, because LCs don't exist really anymore in an effective way. But you can find out about anyone on this call by just collaborating information, your Momo account, your driver's license, your TIN number, your Uber account. Some of us, default, we don't pay Uber, social media accounts, your utility accounts, electricity bills, water bills, traffic offense history, So ladies and gentlemen, as we go through this, let's ask ourselves, what are we doing that can taint our investability or bankable profiles? That's a question. Remember now, with the advent of fintechs, all this information can be collaborated, and in a minute, everyone will know what your credit profile is. Okay, so those are questions that you can ask ourselves. So then we go to the big question. We've talked about how investable we are, but what is debt management? What does it mean? Okay, I want to always say that we can manage debt, but we should not be managing debt. We should eliminate it, especially if it's consumer debt. We should only manage debt that is productive debt. If we need a loan, why are we getting that loan? Is it to buy an iPhone? Is it to buy a car that we can't afford? How do you know that you can't afford the car if you're paying, on a monthly basis more than 30% of your income? You really cannot afford that car, because by the time you finish your loan, you would have bought 3 cars, okay? If you have existing loans, we should be able to review the status of those loans and redeem them as much as possible. Because if you have a loan, investment and loans don't really come hand in hand. Why am I saying this? We are in a 10% economy. Most of the things that we invest in will give us 10%. Meanwhile, on the other hand, loans range from 16 to 20, depending on which loan and which bank. You're the experts, you know this. But surely, even from a mathematical perspective, if you've borrowed a loan at 20% and you're investing, you're also struggling to invest somewhere at 10%, already you're in minus 10 return, okay? Your return on investment is negative. So it's important that we eliminate debt to free our cash flows, and then we can go into the realm of making our cash flows, our cash work for us. How do you quickly eliminate debt? List down all your debts in order, from maybe the biggest to the smallest, or from one with the most interest to the lowest interest. Then you can decide to pay off, meet your monthly debt repayments, and then plan to pay off either the one with the top balance. There are 2 methods. You can start with a small amount because it gives you emotional satisfaction that things are moving. Or you can start with the one which has the highest interest rates because that one frees your cash flows very fast. So today, if you have loans, list them out in order of priority in terms of amount or interest rates, and then start to devise a plan to free yourself from debt. Don't manage it, eliminate it, because the faster you eliminate debt, the faster you start to put your money to work. Okay. So we've talked about how to conquer debt. Now that you have no debt, okay, we're assuming that you've conquered it. Now let's talk about, you're ready for how do we put your money to work? If you have not yet had a debt elimination strategy, you're not ready to invest because, like I said, you'll be in negative returns. But if you're ready, then you start to ask yourself questions like, should I invest or save? I want to tell you, ladies and gentlemen, that, investing is the new savings. So saving is good, but after you've built consistently how to save and it's in your routine, start thinking about how to invest because we want your money to make money for you. All right. Like I said, if you still have consumer debt, you're not ready to move on to the next chapter in terms of actualizing how you can leverage your cash flows. So we have to first embark on, paying it out. But if you're ready, let's go and see what the options are. Okay. The one thing that I would want to share is that there's really no limit to income. Let's develop an abundance scarcity versus a scarcity mentality. What can we do? All of us have passions, all of us have hobbies. Think through, what are your passions? What are your hobbies? What are your skills? Okay, what skills do you want to advance in? There's so many resources online, free resources. You can start to build your skill base because then you can monetize your skill. Also, look at your community. What problems do people have? Then how can you solve those problems? What brain food are you eating? What are you reading? Because those are areas where you can get opportunity to start to increase your earning potential. Today, we want to see how do we increase our earning potential. From my small salary, I have big dreams, big needs, big demands. There's no limit to income, ladies and gentlemen. And I want to show you a sneak peek of what I mean, okay? Let's think of how can we increase our streams of income. Okay, you have your privilege that you have 1 out of 8. You have a job, a working job where you're paid for your time, but that's just 8 hours of your 24 hours. How else can you grow that income base? Because you have big dreams, you have big needs, and you're not going to ask your employer to increase your salary to the point of your dreams. It's not going to happen. But how do you, take that one and income and then increase? What are you buying or selling? Like I said, there's so many problems. Look around. We are privileged to be in a third world country. That means that the opportunities we have are immense. They're immense. So what problems do you see? What makes you annoyed that you want that you can turn into an opportunity to serve? Okay. How about lending money? There are many peer-to-peer lending platforms. You may have some excess calm money, like people like to say, and it can give you a return. Do your due diligence. I have some in mind, but this is not the right forum for that. Your bankers, again, how can you take advantage of the fintechs that are doing peer-to-peer lending? You put in your money, they're properly licensed, and then your money starts to work for you. That is really the big question. How do I make my money work for me? Royalty income. We have bright minds on this call, 76 participants. What ideas do you have? Can you remember, people invest in people. So if you have a brilliant idea and someone can execute it, then you can have royalty income. Let's diversify ways we can use our brains to generate income for us. Then there are those who like to put in stocks. There are companies that are doing well in the stock market. How are you doing that? Rental income. Can you put up some rentals and get some money? At least it's assured. Capital gains, what assets do you have? When you sell them and they've risen in value, then you can be able to make some profit from them. Also, residual income. How can you continue earning work even when something has been done? Have you developed something that is being put to use and you're getting revenue share from that? These are broad ways, but ladies and gentlemen, all of us can pick a thing or two to see how we can substantiate our income, increase our earning potential, okay? I talked about passion. How can you monetize your passion, okay? All of us have passion. So what is it that you can do? What skills do you have so that you can start to monetize them? In the other 8 hours that are not, for your employer, remember, that's what we're talking about, okay? I want to give you some side hustle ideas, okay? Think cottage industry. What can you do? Are you good in photography? Can you get a drone and then you can become a drone pilot in your days when you're not working? Delivery services. Some of you have cars. You can use them as moving billboards. You don't have to be the one in the car, but when you park it there, it's an asset. If you want to make it as an asset, because right now cars are becoming more and more of liabilities because there are different modes you can use to move from place A to B. So how can you make your car an asset? How can you make it work for you? Some of us have idle land, okay? We've accumulated land titles and land titles in the spirit of saving. But how can we use that idle land? There's a new, football pitches coming up in the suburbs. Can you devote one there so that, people who want to relax and become physically fit can use a football pitch? Farmland, can you lease it out? I know someone who grows grass for sale because we're always looking to beautify. People are always building. But after you've built, someone will need grass to maintain, to develop their lawn. Where does that grass come from? Some of us love sports. Can we do some, weekend coaching for kids? Basically, how are we using the assets we have around us to create some side hustle somewhere? Okay, like I said, what problems do you see in your community? What skills do you have? What annoys you and what inspires you? Those are 3 ways you can unveil and unlock an income earning potential, ladies and gentlemen, okay? How about your extended bank account? Recall I talked about trust. Are you bankable? Some of us can leverage on our extensions. A bank account doesn't have to be a physical bank account. It can be that someone trusts your word. How trustable are you? Your network is really your net worth. So if you look at the people in your circle of friends, who are they? Okay? Who are they? And because we know that we're the sum total of the 5 people we hang out with. So who are the 5 people in your speed dial? Who are they in your database? When you need someone to brainstorm, can you tap into those 5 people? When you need someone to discuss a business idea, can you tap into that network? Also, the other way to look at it is the conversations we have with the 5 people. What are they? If the 5 people you have in your database are all on a job, then it's possible that your conversations may be around whining, how you've not been given a salary increase or this or that, your boss is bad. Yes, those things are okay, but they should not, you should not waste your entire time talking about those things. What are you discussing with your 5 people? Are some of those 5 people business owners? Then you can learn tips on how, you can start your business or invest in their business, okay? Are some of them self-employed? Then you can learn a thing or two. Are some of them investors? So who is in your quadrant? In which quadrant are you and who is in your quadrant? When you diversify your quadrant of friends, then you can be able to leverage your extended bank account and learn a thing or two about everyone there so that you can also advance in your financial journey. Now that we know about how we can leverage debt, how we can increase our earning potential, the other thing that we need to think about is how do we then build our investments? How do we plan better and build our investments? So right now, I want us to introduce motivations, why we invest, how we invest, and what our tolerance and risk levels are, because those determine where we invest. And the bankers, you know these things. So the whole point is, how do we apply these things in our lives? Okay. So why do people invest? Everyone has a different vision. Everyone has a different future that they want. All of us have different dreams. So we invest so that we can be able to actualize those dreams. So it's important to know, how much do we then need? Then we can work backwards. How can we make money work for us? So all of us have a different script, like we said in the earlier sessions. All of us are at different levels of our financial journeys, but all of us also have dreams. So how do we actually actualize those dreams? Why do we invest? Okay, many invest to become financially secure. Some of us know that our social security may not be enough, medical care may not be enough. We are sitting a lot these days. We're using a lot of computers. So those things may have long-lasting effects on our life after employment. So how ready are we to live the next 30 years after we've left employment? Because remember, if retirement is 55 or 60, our life expectancy these days, because of the quality of living, is around 90, 80. So what's going to happen in that time? We know that medical care costs are increasing. So people invest because they want to kind of create a buffer. Others invest to keep up with inflation. Our inflation rates are rising every year. So how do we shock absorb that? Some want financial freedom to do what they want to do, when they want to do it, and how they want to do it. So how do we get our money to work for us? Okay, how do we make our money work for us perpetually, whether we're in a job or not? We need to understand the investment risk. Okay, when we invest, there's a chance that things may go as planned or that they may not go as planned. We know that, we are bankers. But many times when we're applying investment risk to ourselves, we want zero risk. It's not going to happen. Zero risk probably is what I would call your internal saving scheme. Like, I don't know if you have a provident fund where people contribute to, and your employer contributes. So that is the safest investment that you can make. Outside that, and why is it safe? It's because when you contribute, let's say 3%, and your employer matches that 3%, that's 100% return. But how many other investments are really sure deal? They're not there. But with risk, with the higher risk, we anticipate that the return will be higher. But also, you don't have to go for high risk investments. You need to just understand what your risk appetite is, and then put things into perspective. Understand your risk appetite, evaluate the investment options that you have, and then say, you know what, I'm 50, I don't think I want to invest in high risk things. I just want to get my money. I'll put it in the safest, the most safe investments around. Oh, I'm 20, I can put my money in stocks because, I'm not timing the market. It's really the time that I spend in the market that matters. So those are things that we should be considering. What's our objective for investing? Okay. What's our current income? What's our age? And what's our risk appetite? When we put those in perspective, then we'll be able to understand which investments are right for us. Okay. I just want to put some light on the different kinds of risks we should be aware of as we go into investment. Inflation. For example, if you put your money on a savings account, one, it will be taken away by bank charges if that account attracts charges. Secondly, your money will be eaten by inflation. The inflation is really rising. So instead of money sitting there, how can you make it work? At least get a return that is over and above inflation, or so you don't lose money, because you want to be motivated to continue saving. Liquidity. Liquidity risk. Some of us put all our money in trees, all our savings in trees, all our savings in land. And then when you want to get money, because of something that has come up, then we cannot quickly liquidate. And really, the whole point is when we diversify, then we have options and we have leverage. If we put our money in one category, then the leverage is on the buyer's side. You know, when you've bought your land at 20 million, and then because you're so desperate, the other person gives you 10 million because you need the money. We should avoid desperate situations. Interest rate risk, I've already talked about this. Business risks, where are we investing? Are you investing in a credible person who is managing the business? If it's shares, are you investing in a place where management is solid? Where are you investing? So how do we then mitigate these pitfalls? We should consider our financial goals when investing, our age, our family status, and our current financial situation. We should never invest money we're not willing to lose. If a friend comes to you asking for money, number one rule, don't lend friends, but give money that you're willing to lose. If you're not willing to lose it, advise them to go to an institution that actually does lend. We've all seen what's going on around. So be mindful, protect your money. Consult. As bankers, we're always giving this advice to our customers, so that because we want the best for them, let's also learn to consult. And remember, we're not running a marathon. I mean, we're not running, it's not a sprint, it's really it's a long game. So we should be able to invest and have the long term in mind, not to get quick money. Oh, this company is listing, let me invest, then I can sell tomorrow. No, ladies and gentlemen, this is a long haul game. So what questions can you ask yourselves when you want to invest? This is a very important thing because we struggle. Many times we use the Me Too syndrome. Oh, Monica has invested in this, let me also invest. No, that's not how it works. You don't have the same balance sheet as Monica. We've seen a living balance sheets, the templates that I shared. Everyone is in their situation. So let's not, think that what Monica has done, it can work for me, okay? So the question I have for you is, remember the occasions in your life that, involve taking risks. How did you handle these? How did they make you feel? This can give you an indicator of really your tolerance for risk, because it's very important for you to put yourself in perspective. You don't want to get a heart attack because your shares have crashed. No. You want to be in charge and know that your shares will crash, but they'll come up again. We've seen the S&P going down, especially last year, and everyone thought that, oh, wow, I've lost my investments. But no, if you're investing in the S&P, you know that that's the cream of the investments and it will come back up. So it's slowly coming back up, but still, you know that you're ready for that, because we go through cyclical movements in the stock market, and you should be ready to take that risk. So as I conclude on this part, whatever you do, you need to balance. Okay, refer to your personal financial statement and identify and assess how diversified your investments are. Are you balancing between short-term and long-term? Are you balancing between liquid and illiquid assets? How do your investments in your profile reflect your desired lifestyle? That is a question everyone here can answer for themselves, because we have different profiles and different dreams. So the last segment is really about the economy and you. Now that we've learned how to manage debt, we know how to increase our earning potential. We know the different investment questions we should be asking. Where does the economy come in? I just want to put a few highlighters here, okay? I want to show some numbers, some key numbers that you should be aware of as you invest your money. If you're putting your money in a bank, bankers, you should know the deposit protection limit is 10 million. So as you're putting money above 10 million, just know that if anything happens, that's the maximum that you can get if a bank goes bust. But that's not what we want. We want to make our money work for us. Inflation rate is 5%. So anything that gives you less than 5%, it's really a zero-sum game. How do you incorporate inflation when you're investing? We know the CBR rate. We know what it means. You're the experts. So what does that mean for interest rates on the market? If you're in a business and you're going to borrow at 20%, which business then can give you that return so that you're able to pay your interest and also stay with a return? Think about it. In Uganda, our average rate of return is 10%. Remember the example I gave you about do you invest or do you pay down your debt? And I recommended that we pay down our debt because with a 10% economy, if you're borrowing at 20 or 16, you're in minus prima facie. Tax rate. We usually don't want to talk about taxes. As employees, government is a first shareholder in our business of Monica Limited. We've paid government 30%. But even when we start to create other sources of income, we should be mindful that government has to take their share. Nothing under the carpet. And I will have one of my tax experts take us through what you're not told about taxes that can get you into trouble, probably in the next session if we run out of time today. Okay, so we talked about inflation. I want to highlight here what it really means. What can a dollar buy? In 1930, it could buy a meal at an upscale restaurant. In 1940s, it could buy 20 bottles of Coke. 1950s, 4 gallons of gas. 1960s, movie ticket, popcorn, and candy. 1970s, 2 dozen eggs. 1980s, 2 loaves of bread. 1990s, it could buy a half a gallon of milk. In the 20s, it can only download a song from iTunes, for those who still use iTunes. So this is what puts inflation into perspective. A dollar today is different from a dollar 5 years from now. Where are we investing our money? So we need to account for inflation in everything that we do because inflation is with us. And I don't know if Pamela is on. So you can tell us about the taxes that we're not told about. I have my colleague Pamela on the call. Pamela? Okay.
You should have the rights in a bit.
Okay.
Just give it a second.
All right.
Okay, Pamela, there you go. Just proceed and unmute. Yes.
Okay. Okay, so Pamela is going to tell us about the things that we don't talk about in taxes. Okay, welcome, Pamela. Thank you. I'll move the screen for you. Pamela, go ahead.
Hi, everyone. My name is Pamela. I am a tax consultant with BDO. I'm happy to be here. I hope you can hear me.
Yes, we can hear you.
Yeah, so I'll just go through the different taxes that you should know about. Of course, there's the income taxes, the ones you pay as you earn, the payee that you pay month on month. I'm sure each of you pays pay as you earn. Then there's those that are directors. There's those that are consultants like Monica and myself. And then those that are directors. So all those are income taxes. Then there's the consumption taxes, that's VAT. This one I am sure everyone pays. Monica, the previous slide, please. Thank you. Then there's investments in shares, in basically shares and all those other investments that we put our money to. I think that's what Monica called side hustles. Yeah. So we shall look at the different things that you would consider side hustles, and then I'll give you tax implications of those. For example.
Sorry.
Okay. So many people go for real estate, but this has become a challenge lately because tax rates on rentals have gotten to a point where you can no longer deduct your expenses. For example, the new amendment that looks at deducting just 50% of your expenses and taxing the remainder at 30%, which gives an effective tax rate of 15%. Yeah, and then for individuals, an effective tax rate of 12%. So, and this does not put into consideration any deductions. So that is something you need to keep at the back of your minds. How attractive is real estate? So you put up a structure and you can't get any allowable deductions. So that means the loan that you get from the bank, the loan interest can't be deducted. Painting works, construction works, all those costs you can't recover in the current tax regime, which makes real estate very expensive. So that's something you need to keep in mind. Then there's the buying and selling of land. Now there's people who are in the business of buying and selling land, buy 1 acre, subdivide and sell. Now the new law, but this law has been there, where the buyer is required to withhold at 6% of the amounts that have been paid to you as a real estate dealer. Yeah. And there's capital gains. If you bought land at 7 million, sold it at 10 for 3 million, 30%. Yeah. Then of course there's the transfer stamp duty. This is not a tax, it's really just a duty to authenticate the transfer, the document of transfer. So that's 15% on the agreement, 1% of the total value in case of a lease, and then in case of transfer of land or property, it is 1.5% of the total value. And then there's people, some of us who are in commercial property, put up a building and rent it out to Pamela as a consultant. I use it for business and it's not a residential property. I pay you more than 150 million a year. You're supposed to register for VAT, and I hope you're aware of the recent IFRS rules. You're supposed to be registered on IFRS. So that is it about real estate. We can have more discussion on these different investment ideas and the tax implications in probably a different engagement, but in 10 minutes, honestly, we can't do so much. Then so some of you are into consulting. Yeah, consulting is just like any other business. It's a standard rated supply. So if I have a turnover of more than 150 million, that means I have to charge VAT at 18%. Then it's a business. Our previous.
Which one? Which one do you want?
Where
Okay.
there's consultancy. Where there's consultancy.
Okay.
Thank you. Then it's business income. So 30% of your profit before tax, yeah, is taxed. So you can see that even as a consultant, there's tax to pay. Then there's the point of registration of your consultancy. There's 0.5% of the nominal share capital. So if the share capital is 1 million, 0.5% stamp duty is payable at the point of registration. Let's move on. So some of us here are directors in many companies, and I would like to tell you what that is doing to people right now or to companies. Today, for you to get a TCC, all the directors in your company need to be compliant. So imagine a situation where Monica is a director in 10 companies. Yeah, the administrative burden is big, and it can stop other companies from getting business growth, because one director is not being compliant with their taxes. So you need to keep that in mind when someone asks you to be a director of their company. But directors, just like me and you, are taxed on the employee rates with a threshold of 2.8 million a year. These are annual rates that you see here. And then people who earn more than 10 million are taxed a little more, an extra 10%, they are taxed at 40%. So I'll talk about the bottom, the threshold, which is 235,000 per month, and then the top, which is 4,920,000. So anyone earning above 4,920,000 will be taxed at 30%. However, if you earn more than 120 million a year, an extra 10% applies on the extra income. So I hope you're aware of that. Then there's people who have retail shops that are small, really below the 150 million threshold. Yeah, these ones are taxed at a presumptive rate. So if you're earning less than 50 million, there's actually no tax. And if you're earning more than 50 million, but less than 75, you either pay 937,500 shillings or 1% of the value, ever lower. Yeah. Then if you're earning less than 150 million, but more than 125 million, it could be 2,060,000. So you need to know. Yeah. The assumption is that these businesses in Kikuvo, you have a small grocery, they wouldn't expect that you have records. However, if you have records are allowed.
Pamela, we're losing you. Okay, I'll take on from here. I know that time is fast spent, but I thought it was important that as we talk about the different investment options, you are aware of what the liability is. And in this era of big data, we can no longer hide and say the taxman will not find me, ladies and gentlemen. Remember the question, how bankable are you? If they find you, it will have far-reaching implications even on your number one job, which gives you the seed capital to invest, on your number one job, which is your employment. If the taxman comes on you and you have unpaid dues, just know that it can actually make you lose your job, okay? Because any company does not want to associate with someone who is a defaulter and they're not meeting their part of the bargain. But there are some investments that are tax exempt for now. Income from collective investment schemes, SACCOs up to 30th June 2027, that you can leverage and say, you know what, I'm not ready to go into the shenanigans of filing taxes. Let me focus here. So everyone is catered for, really. And as I conclude, now we know that taxes make up a big portion of our expenses. Let's continue learning and knowing what the implications of everything we invest in means. Do we think taxes will increase in the future to fund our country's growing debt and social security shortfalls? I think yes. I think they will continue to rise. So as we know that they will continue to rise, and we have an investment portfolio we're building, we need to put them into consideration so that we're not caught off guard. I would like to end here. Thank you very much.